Today we're going to be discussing who should own your policy, you or your business.
Enjoy the episode.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And today what we're going to be talking about is ownership. Who should own the policy? This has come up many, many times over the years. Today we're going to be talking about whether it should be your business or whether it should be you personally. Anthony, how many times do you get this question?
I'll say about once a week.
Yeah.
You know?
Well, here's another question, is why do you think this question comes up?
Well, I think it's really two reasons. I think the number one reason is people think, well, hey, if my business pays a premium, my business can deduct it. Wish that was true.
That would be.
Right?
That'd be nice.
Now, there's special tax code that specifically says life insurance premiums are not tax deductible. Okay? But I will say there is a way.
Ooh,
okay.
Do tell.
But before you get too excited, okay, it's a very niche solution, and some of the highlights, or I'm kind of give you some of the obstacles. It needs large premiums.
Mm-hmm.
We're talking about $100,000 or more a year. You got to pay it for the first 5 years.
Okay.
If you don't, you surrender the entire policy.
Ooh.
Okay.
Steep.
Also, you can't bank with it. Right? So we can't use what it is that we're doing. But there is a place for it.
Mm-hmm.
Right? To me, I think doing more of a traditional IBC policy, not getting the tax deduction, but being able to get to use the money is going to be worth it in the short run and the long run. But if you're in a situation that you might want to take advantage of this, let's get on a discovery call and let's kind of talk about to see if this is a good fit for you.
So that's one reason.
Yeah.
Right? Anthony, what's the second one?
I think the second reason is that's where the money is.
Mm-hmm.
Right? That's where typically our money is flowing through our business or our S corp, and it's just simple, right? To be able to pay it. But you can have the policy owned personally and have the business pay it. To be honest, that's what I do with a lot of my policies. The key thing is when I make that premium deposit, I don't deduct it. It's not an expense. It's more of a shareholder draw or some sort of distribution.
Good to know. Good to know.
Yeah.
Well said. And this is about the time that you tell people that you're a CPA, right?
See, I don't need to tell them I'm a CPA because you always tell them, so I appreciate it. I'm a recovering CPA.
No, man, we're relying on you today, right? This is a lot of Anthony Faso today because this can be kind of technical, but right, we are going to use your expertise to kind of let people know your perspective on how they should be owning this thing. So what I've heard from you so far is there are some situations in which the business could own a policy, right? So what are some of the advantages of having the business own a policy, Anthony?
I would say that it's an asset on the balance sheet.
Okay.
Right? Because we have to realize that we have a cash value and that you can put this on the balance sheet. So if the balance sheet is important, you might want to increase that asset on the cash value as opposed to maybe taking a distribution, which is going to remove the money off the balance sheet, right? Typically, in addition, your policy is going to grow every year. Mm-hmm. And even if it's a business owned, that growth is still tax-free. So we have the ability to make our financials look better because we have a growing balance sheet. We also have some profit showing up, which we're not paying taxes on, right? But I will say that's typically, I think most business owners don't really care what their balance sheet looks like. Mm-hmm. It's third parties, right? It's bankers or people that they're, or investors, or, sometimes people have partners. And it's a little more difficult to kind of move the money out. Another advantage is again, we have another special rider that we can put on the policy where, let's just say, for example, your premiums are, let's just say 20 grand, right? As if we know if we have this ongoing policy, we're going to lose some liquidity those first couple years. And if you're putting it on that balance sheet, it's not going to look good, right? We have cash going down 20 grand, and maybe the cash value is only going to be a percentage of that. But there is a way that, again, with this rider, and this is specially designed for business owners with the balance sheet in mind, where the surrender value is equal to the cash, what your premiums you paid less the cost of insurance. So in essence, your balance sheet liquidity is only going to take a hit for the cost of term insurance. So it's going to be very little, and they're only going to have that for the first couple of years. But you want to know what's even cooler than that?
What's cooler than that?
is we can put a LELOC on that, right? Which is a life equity line of credit, and we can borrow not against a cash value, we borrow against a surrender value. So we have the ability to put it on your balance sheet, small loss of liquidity, but you're able to use almost all of what you put into the premiums. Now, when we use this type of rider, again, the premiums got to be a little bit larger. So they're probably going to have to be about 75 to 80 grand, depending on the situation.
Okay. Man, you're handing out some nuggets here, Anthony. Let's transition. Let's talk about what are some of the disadvantages of having the business own the policy.
I would say odds are you're going to outlive your business entity, right? We might have LLCs or S corps. So maybe you may have multiple of them, but odds are something you're going to wind down or sell or make some sort of transition. And when that is an asset of your business, it makes it a little bit more complex, right? So, because it's an asset of the business, so we have to follow some certain rules to distribute it to the owners. If that's not done correctly, it could create a taxable event. And to me, probably one of the biggest concerns or disadvantages is we're going to lose the asset protection.
Ooh, yeah.
Right? Because it's now an asset of the business. Thus, if the business gets sued, they can go after the assets of the business, including your policy. If you have that owned personally outside, there should be a level of asset protection that typically is different from state to state. But many states have 100% protected, and every state at least has some level of asset protection.
Well said. Good job hitting the highlights there.
The highlight of this, man, you're full of compliments.
I'm just standing here. Yeah. This is the Anthony Faso show today. Well done.
If you say so.
Yeah. So let's transition. Let's kind of wrap this thing up. Is maybe what should somebody do? What opportunities are there? When should a business own a policy?
I think, to me, there's not a lot of advantages.
Yeah.
So most of the time, we're going to default to owning that personally. Now, however, there's some situations where the business could and should own it. And again, it gets to be if you have partners. I think most of our listeners kind of have they're a one-man shop.
Yeah.
Right. They're the owner. They're the single owner, so they can. It's not a big deal, money flowing in and out of the business. However, when we have partners, it gets a little bit more complex. And if you have partners, one thing you should have is some sort of buy-sell agreement. Now, what that buy-sell agreement does, it stipulates what's going to happen. Typically, if there's a couple of triggering events. The main one people think about is, what if a partner dies? And the default of that is their spouse or their next of kin is going to take over that ownership. So they're going to be your business partner. You might not want your partner's spouse to be a business partner. So Or so it can be upon death, or what if somebody wants out? Like, hey, I don't want to do this anymore. The best thing to do is to document what the exit strategy is going to be while everybody's, singing Kumbaya and excited about starting the business. When somebody wants out,
it can get ugly.
Yeah, it's kind of almost like a prenup.
Yeah.
Like, hey, if this doesn't work out, this is how we're going to divide the assets. And oftentimes what we're going to put in there is, well, what happens if an owner becomes disabled, right? They don't want to leave, but they can't contribute to the business like they originally planned, so it's a little unfair to the existing partners because they're not contributing. And so that buy-sell agreement could stipulate what's going to happen if somebody becomes disabled. Now, oftentimes when we have when we do a buy-sell agreement, again, typically we're solving for death benefit.
Yeah.
So oftentimes term insurance can be a great product to solve that problem. But again, you kind of know our version of term. It is a great tool, and there's a place for it. But ideally, if we could have a whole life, it could be better. So one option could be is the business could start practicing IBC, right? The business should have reserves. Where should we store it? In somebody else's bank or maybe inside your policy? So you could take those reserves. We have a one and done design, meaning that you just make one single deposit and you have a very small loss of liquidity. So we could just move that money from the savings account into a policy where now it's going to grow more than it would be at the bank, still have access to it, but now it also creates the death benefit. So maybe we don't need as much term insurance. But then also when we borrow against a policy that for the business, that interest is a valid business deduction. But remember, the interest we're earning on the policy is tax-free. So there's some ways to manipulate or to create some tax deductions. Another strategy or advantage of having a business own the policy is that could be what could be used to buy out the partner, right? Because if we have a buy-sell agreement, probably the most dangerous thing is to have a buy-sell agreement without the financing to back it up. Because you could say, hey, if partner A dies, we're going to value the business at X, and we're going to pay the spouse that maybe in lump sum or over the next 5 years. That's a contract, right? So if that person dies and you haven't planned for it, that spouse or the next kin can sue the business and demand for the payment. So it's important if we do a buy-sell agreement that we have some funding, whether that's term or whole life. But also, if you're going to buy out that partner, it's going to take some cash. So maybe we could start saving for that plan now. That was a lot.
That was a lot. And I zoned out as you got at the 6-minute mark and just yapping on and on. I'm just kidding. No, that was well said, well put together. And hopefully this is helpful to our listeners because we get this question often and there is some confusion that surrounds it. So ideally, we usually default to kind of personally owning these policies, but hopefully Anthony's overview gave you guys some insight.
And I would say, again, all my policies are owned personally, right? Even though I have policies on Cameron, I have policies on key people, or Becky is a key person for sure. Those are all owned personally because to me, there's not a lot of advantages.
Yeah.
Right. But what have you seen, or what do you recommend to your clients, Cam?
Same. I get the same set of questions, and typically you're right. It's because that's where the cash is. But man, since day one, I have always held my policies personally. And at any point, if any of the businesses that I've been in, if they ever needed capital, I've actually made a loan from my policy to that business and let them go out and spend that money however they see accordingly. So that's the way it's always been structured for myself as well. I think you did a good job of kind of giving the highlights. But I will say is that, right, there are some situations that are one-off situations. And so if you guys have questions, feel free, reach out to us, jump on a discovery call, give us a quick overview. We're happy to help out, point anything out, or give you some advice there. So we'll make sure that we put that link for discovery call in the show notes, and hope to hear from you guys.
Go make it a fantastic day.
Take care.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.